Good evening, everybody. Okay, tonight we're going to spend a little bit more time on the analysis. So if you read morning, you will see me kind of direct things toward the direction of what the probabilities are. So once we hit, let's just start from the everything that we can see on here. I mean, first of all, look where the selling occurred. Evening star right here at the 50 area. Evening star right here at the 50 area. And then what was the other piece of evidence that the sellers were in control at those levels? Close below the T-line. A close below the T-line. So then you could also add, the bigger the signal, the more compelling there's been a change of investor sentiment. So we can see where the support level was. We can see where the resistance level was. If we can see that, that means every technician out there can also see that. We just happen to have a better view of it because we can see when there's been a reversal signal. Whereas other people using the bar chart or whatever else they want to use don't get as much clarity. Number one, they don't know whether the uptrend channel is still in progress. We can see it's an actual strong sell signal. And you add the little benefit of, I say little benefit, the major benefit of the T-line, it makes it much more compelling to figure out for us what's actually going on. So it's kind of adding like 2 and 2 together. The more facets we can add to say, all right, we're in a downtrend. But where was our possible support? There was a hammer signal. But where was our lack of confirmation? Oh, they gapped it up the next day. Where did they gap it up to? The T-line. And then what happened from that point? They were selling. So what analysis or what assumption should we make using the T-line factor? They still weren't coming up above the T-line. We weren't in an uptrend yet. May not have told us that we were in a downtrend. Just told us we weren't in an uptrend. The next day at Doji, where'd they close it at the T-line? What did it tell us about our uptrend? We needed to see a buy signal and a close above the T-line. Still didn't have it. The next day, this still gave us the indication that we could possibly be supporting here if they could get up through the T-line. But we could also observe that if they broke this level, you could start adding everything up. They couldn't get up above the T-line. And then on Friday, when they gapped it down and traded lower, that pretty much told us this area was not acting as support anymore. So I point this out because this is why it's so obvious to me that when you add all the elements together, we know which way things are moving. Does the slope of the T-line ever enter your consideration? No. The T-line is a function of where the price is. Now, obviously, if the T-line is moving sideways, more than likely that means the trading is moving sideways. The fact that we're in a downtrend and we still, it doesn't matter which way it was going, because if it did come up above the T-line and start trading positive, what do you think the T-line would be doing? And start curling back up. So should the recent overall market condition have kept us out of any long positions? If not, is there anything extra we would need when evaluating long positions? John, if you read the morning comments and the afternoon comments, the answer is, if you're long, you should have a very compelling reason to be long. Why? Because the observation is that the downtrend, until they breach reached the trading rule that you need to see a buy signal and a close above the T line. If you don't see that, the assumption with an overall favorable probability is that your downtrend is still in progress. So as you saw in the morning comments, up here was saying, all right, start looking for short positions. Any long positions should have compelling reason. Now, I'll get to some more here in a minute. But to answer your question, no, there was nothing in here unless you had a strong bullish signal that was still keeping you up above the T line on the individual chart. There's nothing here to tell you should be aggressively long. At this point, it was also telling you you might not be aggressively short. So you would have seen a few days there where we said, all right, you might not want to be long and you might not want to be short, so it would be prudent to kind of sit in cash until we see which way this market plans to go. Now, that's not anything from any great, deep analytical interpretation of what the market's doing. That was just simple rules. They weren't up above the T line. They were still above the support level, telling us there was indecision here. We wouldn't know which way the investor sentiment was going until they either broke this way or broke this way. Well, obviously on Friday, when we saw the doji and gap down, with stochastic still heading down, they weren't in a condition that told you, yeah, we should start looking for buy signals. Still heading down, so there was nothing to tell us the bulls are taking control. Now on Friday, had it opened lower, traded down here, and then came back up and closed here, that would have still given you an indecisive trend analysis because you'd be right back in the support area and you didn't have any decisive sell candles. It was still indecisive. The fact that they gapped down and closed down here pretty much told you what the investor sentiment was. They were selling. So I'm pointing this out because what is obvious to me may not be obvious to people that are still trying to learn the candlestick analysis. But this is why I always use the simple rule that as long as you're below the T line, you've got to assume you're still in a downtrend. Now, what's this telling us? Well, we're still not quite in the oversold area. I'd be looking at this as wave 1, wave 2 sideways, wave 3, kind of the same magnitude as this move right here. So with that, this morning when we woke up, this is why you want to always take a look at your pre-market futures because they're going to at least give you an idea of which way they're opening the market. They were opening the market weaker. Was it opening positive and possibly doing a bullish harami? And at some point during the day, as you saw, they came up to where the Dow was only off maybe 15 or 20 points after being down 300 points. What was the overall direction of the market? That's why you have to sit and wait. And I say this not from any sage advice, just from years of short, and now look what they're doing. They're bringing it back up. Let's cover the short positions. But instead of waiting for the end of the day, which is still pushing downward, I look back and say, dang, I covered when they were trading up here. Now I'm reshorting, gave up some profits. Now I know until you see a definite reversal signal, you stay with the trend. How do you look? How do you look at November 25th? Doji was in a buy signal and then a close November 25th, right about here. How do you look at, well, look where it was occurring. Let's see, let's cut the chart off right here. Look where it was occurring. Little teeny, maybe inverted hammer, but an indecisive trading day, right about at this support level. And this support level I just drew because of the open and close. You could have drawn it right here, but you could see that it was pretty much at the bottom. And so what do we know about what do we know about kind of a doji type day? It's going to move in the direction of how they open after a doji. So we were still sitting in a condition right in here that said, oh, there's some buying occurring. If you were short, you want to make sure that whatever buying wasn't creating some sort of buy signal on your individual positions until we saw there was more confirmation that they were moving up above the T-line. If they were moving up above the T-line, now what becomes our next target? Kind of right in here, the 50-day moving average. Now we had a gap up through the 50. That would have been a good, strong breakout signal had it not been a doji day. Because what did the doji day tell us? There was indecision between the bulls and bears up here. And what's our simple rule of the doji? They're going to move it in the direction how they open after a doji, which told us when they started selling off here, what could we assume by looking at what everybody else was watching? That this little resistance level is still acting as resistance. And by the end of the day, if they had sold it off, now if this was a trading entity and they gapped up, where's your safety stop? Right here at the low of that doji, because logic says if it moves in that direction, it's moving in the direction of how they opened and traded after that doji. So you're just using some very simple rules. The doji rule, the T-line rule. All right, now we're back down here, and opens positive. Oh boy, that looks like they supported. But now by the end of the day, they're selling it back off. What did that tell us about our bullish confirmation? There wasn't any bullish confirmation. What's that telling us about our support level? It's still questionable whether they're ready to take it up or whether they're going to breach. They tried to take it up, indecisive. Tried to take it up, indecisive. But what was the one visual confirmation in these trading days right here? They couldn't close it above the T-line. The green line is, where is it? What you have here is the red and blue. The red is your 200-day simple moving average. The blue is your 50-day simple moving average, what everybody has on their charts. This little gray line is your 34 EMA, which works relatively effectively. And then the little green line, the black line obviously is the T-line. The little green line is what we call the 3T line. And the 3T line becomes more effective the further away you move from the T-line. Just another quick indicator. Concerning the red and blue stochastic lines, do both need to be at 20 or less to be considered oversold, or is one? All you're really looking for is where are you? Are you close to the oversold or you're close to the overbought? So if I'm looking at this, I can pretty much assume I'm getting close to the oversold area. If I'm looking at this, I can assume, yeah, we're getting close, but we're not, maybe not there yet. So the answer is no. They both don't have to be in the overbought or oversold area. You're just looking at where they are relatively. Reversal signals with confirmation. Yes, need confirmation. So right here we didn't have confirmation. First of all, even though they took it up this day and had a positive day, was that a compelling or is that a convincing day? No, that was indecisive. Next day, they tried to take it up again and did a doji. Doji is not a very compelling, forceful move. It's indecisive. Then we know the simple rule of the doji. They're going to move it in the direction how they open it. And the fact that they gapped it down, especially through the low of that doji, told us there's a lot of force, which also told us this support area is probably not going to hold. You do that same analysis with the NASDAQ. Where's our bearish Harami occur? Right smack dab off the 200. What did this tell us? They were having a hard time getting up through the 50. And what does this signal tell us, or this candle? The bigger the reversal, the more compelling that you're heading in that direction. Also, today, you could kind of consider this as your support level, but notice you had a shooting star, bearish left-right combo, gap down to the support level, which also made today's trading very simple. You wake up, and the pre-market futures are telling you they're trading lower. This is pretty much telling you left-right combo, gap down, stochastics heading down, probabilities are you're heading lower. All right. Is there any more questions on that? This is what keeps me in the right direction at the right time most of the time. Now, if you're like me through the years, there's lots of times where I'll do something because we can see that it is working. For example, today LSCC was trading positive. It opened here and was trading up here when the market was off 200 or 300 points. But then look where it closed. Back right in the range of the signal or pattern that told us we should be breaking out. So this was the hardest thing for me to eventually get in my head, which was, if I put out a position and everything's working, and by the end of the day it's not working, I still kind of had this residue thought process. Well, it was working, so maybe I ought to wait one more day and see if it's still working. Instead of saying to myself, all right, this didn't work, close it out. What I eventually had to realize is not every trade I'm going to put on is going to work. Now, why didn't this one work? More than likely because the market was soft. It doesn't matter why it didn't work. Just told you it didn't work. Close it out. Now, is this out of the question? No, you still have a J-hook bobble breakout that if this started trading positive tomorrow, yeah, you could get right back in it. Or if you were usually like me and said, I'm going to give it one more day, now I know what has to happen tomorrow. It has to open positive and trade positive. Does the gray line, the 34, come into play? Lou, it works relatively well. I say relatively. It's not like the major moving averages, like the 200 or the 50, but it seems to work. It's the 34 EMA. Seems to work decently well enough that you can put it on your chart. You don't have to use it as a major factor. It's just kind of a confirming factor that sometimes prices move back to the 34 and back up again. Is it too late to get into short trades? Yes, tomorrow, now that the stochastics are reaching the oversold area. Stella, we will get to that. Marshall, there's the next plan. Again, what's our biggest bugaboo? It's trying to overcome our own emotions. So what are the things that I hate to look back, say, all right, I bought this, I closed it out. Next day it opens up here and goes up here. And I'm thinking, oh, you nincompoop. Why don't you just hang on to it? Now I do what you just did. close half of it, and it opens positive and starts trading positive, and I can buy back the other half. At least I tell myself, I protected myself. I was pretty smart, and I didn't have that big a loss of potential income. So if I see something that looks doubtful, yes, sell half the position. Yep, so now you know what your next criteria is. It better open positive and trade positive. If it opens lower, what's it tell us about our breakout? It's not there. Move on to something else or wait for something else. Maria, yeah, right now it looked like the the aftermarket futures were up. I think on the Dow about 75 points. But you got to remember one thing: the aftermarket trading doesn't mean a hill of beans until about 10 minutes before the market opens. Who do you think is putting in the orders after hours? It's not the major institutions coming in and picking up 500 contracts of the S&P or the Dow futures. It's the little traders. So we're not interested in what the trading is after hours. We're interested in what everybody's decision is when it's in the morning and they're all putting their orders in. Roger, the nice thing about candlestick analysis is, as you can see, there's not a whole lot of stuff on this chart. If you want to add the 100, if you want to add the 500, if you want to add the 17, whatever you think might work, put it on there. The underlying factor that works are the signals themselves. Everything else that we're putting on these charts are just confirming indicators to improve the probabilities of what we're seeing on the signals. So if there's 100 in here, yeah, you kind of, if it works effectively, keep it there. The other thing I tell people is put something on, because I got, through the years, people have constantly said, hey, add XYZ to your chart. Well, you can add it. And if 2 or 3 weeks later, you see it's not working, take it back off. Okay, so why do we need to, not important at all, Bob. Now, it is a little beneficial adding confirming indicator that if you see the 3T line not coming down through the T line, that's kind of telling you, yeah, they're not really selling it off, and that's probably going to be an indication also that the signals, the actual candlestick formations, aren't coming down through the T line. But if you start seeing buy signals, yeah, that's a little bit more compelling when you see the 3T line come up through the T line. It's just, this is the important factor, the signal. The 3T line just acts like a little confirming indicator. All right, so here is the reason. I'm going to get many questions of people saying, well, if you see a buy signal, why don't you buy at the end of the day if it's a buy signal? Because I want to see it confirm. I would rather be 10, 12, 15 cents late than buying here, seeing a bullish Harami, bullish confirmation. What do we need to see to tell us the bulls are in control? Obviously, we want to see more upside. The fact that the market opened lower, this opened lower, shows that. You don't want to be buying yet. If they bring it back down here to the T line and then bounce back up and then come back up through this level, yes, that's when I can be buying. But I don't want to be buying here with the anticipation that everything is going to be hunky-dory the next day and have it open here and end up down here. If I bought here and it started trading off, what's my next thought process? I'm going to wait to see what it does at the T line. It didn't hold at the T line. I'm selling out here instead of getting out much earlier. So here's why you want to, when we did the option training this weekend, Our number one analysis every day is the market moving in the direction we expect it to be moving? So Aqua was acting well ever since the piercing signal, doji sandwich, staying above the T-line. Notice in this case, the 34 was a relevant resistance level with a doji. It pulled back. So we're sitting right here on the T-line. So what do we need today? You can see it open positive and trade positive. It did that for a while. But then look where it closed, back below the T-line. The Stochastic's rolling over. So if you're looking at this with just a general analysis for yourself, are we heading up or do we have the potential of heading down? Or from this level, which way can we go? At this point, it's not telling us that we've got any probabilities in our favor. So I would have closed this out today because I don't know whether it's going to go this way, or this way. Now, if the market turns around and we wake up tomorrow and the pre-market futures are showing us the Dow's going to open up 220 points, and this is opening up here, yeah, I can always buy it back. Going on the same philosophy that if this was a 4-point move and I only got $3.60 of that move, but every time I was in it, I knew it was headed in the right direction, that 40 cents that I didn't get was just insurance that I wasn't holding on to something that might gap down the next day and I give back another 80 cents. Right now, what are our expectations here? We don't know. It could go down, sideways, or up. We can always identify when a J-hook pattern is setting up, and we can always buy back in. Let's see, what else did I have? We have a few that were working reasonably well today. You can see how SSRM was still moving in the right direction. I think somebody pointed out that SA moved up nice on one of the gold stocks, and I'm going to skip around here. That's because you can see Nugget in this big fry pan bottom was still staying up above the T-line. So what did this tell us? That not just only for Nugget, but if you've got a fry pan bottom and Nugget is trading stronger, that's pretty much telling you the golds are trading stronger. So that gives you a place to start, or if you want to be long, a place to have a few long positions in gold stocks. Another one that held up well is MITK. When it broke out through this level with kind of a message, today it came back down and tested the T-line. Now, if I was trading this one aggressively, which I wasn't, when it started trading lower, may have closed it out because where do you think it was going to? The T-line. Was the T-line going to act as support? We didn't know from here. For all we knew, it was heading right back down here. But the fact that we saw that it hit the T-line and came back up, what did that tell us? Now, when I rhetorically ask, what did that tell us? It's on the basis that if nobody has the T-line on their charts, except us, or some of the people we've shown in our evening sessions, when it hit the T-line and nobody has that as a indicator, that's just a not a logical, but a natural support level of human nature. We can see it much more graphically because of the type of signal and the fact that we have the 8x or the T-line on our chart. Yeah, pause another one. So you know the golds and the silvers are working. We did Aqua. So here's one that I had. I had some calls on this one. And you can see today it opened here and was trading up here, a little morning star signal. What was the assumption at that point? Man, even though the market's selling off, they're buying this one for some reason. I'm going to hang on to these. But then when it came back down here, back to the T-line, what that tell me about the trajectory of the buying? It wasn't there. What was happening with the overall market? It was heading down. So if I didn't have a trajectory that was telling me the bulls were taking control, and there was no real positive trading on this, that tells me, all right, I shouldn't be in here. The odds are against me right now. Close out the position. What's my worst case scenario? Next couple of days, they start trading it back up. I can always buy it. But what I don't want to be doing is hanging on to it where they come back down and test the 50 or come down and test this level, especially in a soggy market. The one thing that greatly enhanced my earnings was one day when I said to myself, hey, if I sell here, I can always buy it back if it shows strength. So here's, again, observe the obvious. The 50 is acting as a kind of a relevant resistance level. Notice our bearish doji sandwich that closed below the T-line. They couldn't get back up above the T-line. What's our next logical target? Humbug. See how small I can do that. Now let's just kind of put what everybody else might be watching. Downtrend. Downtrend. Where's our next possible target? Down to the bottom of the trend channel. Now, what's everything that we're going to be watching for on the way down if it's heading that direction? First, we want to see if it supports at this level. If it breaches that level, now we know what our next target is. So what makes us feel that here is a good short? Because it failed at the same resistance level. It failed at the 50. And how did it fail? With what we know is a high probability sell signal, which is a bearish doji sandwich that closed below the T-line, and stochastics heading down. That's got all the simple implications that this is still heading lower. Does that mean it can't open positive and head up here tomorrow? Nothing stops that from happening. But the probabilities right now are telling us this is what the investor sentiment is showing us. We're still heading lower. IMMY. Nice strong signal ever since your inverted hammer. Big move, uptrend. May have closed out here, and then there's your kicker signal that will send it back up. But now we're up here with a doji, bearish left-right combo, a bearish doji sandwich. That told us we should be out of this trade. Is it possible for it to turn around and head back up? Yep, but right now we've got a bearish close out the position. And I say close out the position. The faster I close out positions that I know aren't working right now keeps me from holding on to something that the next day they gap it down or they continue to trade it lower. And I'm always hoping they're going to take it back up. At least now I know that if they open it here tomorrow and close it back up here doing a bullish engulfing, I can get back in because the pattern tells me that the bulls have stepped back in. So if I'm starting to move too far away from the T-line and I see the market is not trading positive, where do I have my safety stop? Well, there's my doji Harami. I'm putting my safety stop just below the low of that doji because logic says, based upon candlestick analysis, that if they come down through the low, which way are they going? They're heading lower. Where do you think the first target's going to be? Probably back to the T-line. Will it get there today? That might be 2 or 3 days for it to get there. But why risk it? We know we have a sell signal confirming in the overbought area, and we know we're too far away from the T-line. Once again, you add that all together and add the fact that the market is selling off pretty hard, close it out. Oh, this was all to kind of illustrate. This is Clovis. I got to go back up here and see who asked the question. Stella, no, there's things that are just starting to turn over, but that wasn't the question I was trying to answer. Who else? Maria, the aftermarket prices show indices moving up. Yeah, I wouldn't put any weight into those until 10 minutes before the market opens. And I wouldn't even put very much weight into them until I would rather get the fat part of a trend versus trying to get right in it at the exact time where you still don't have confirmation. Bruce, if it hits a target, and I'm going to just show you one that we shorted, I bought puts today, Shopify. And we discussed this in our option training over the weekend. The fact that you had a doji gap down, your bearish best friend, told you if this started trading lower tomorrow, you could be shorting it, because where was your next likely target? You know, you can kind of see there was a support level right here. So if it gets to this level, and my stochastics are right about here, I'm still going to be a little bit more diligent as far as watching on my 10-minute chart to see whether this is a relevant support level or whether they're going through or not. So if we see it hit this level, let me go back to the there was one today that could conceivably have hit a support level, the NASDAQ. Is there a bounce from there? I would be more apt to think there's going to be a couple of days of congestion, allowing the stochastics to just get into the oversold area before starting to bounce back up. Now, that doesn't mean that they couldn't open here and close up here. That would be more confirmation that this was a support level. But if I've got things, I'll get to the shorts here in a little bit. But I'll get, let me get to that. Yeah, and so if you start seeing buy signals down here, yes, that's your first bounce, is maybe back up to the T-line. That doesn't necessarily mean your bounce back up to the T-line is telling you you're in an uptrend. It's just bouncing up to the T-line, and you have to see what's happening at that level. So on things like this is why the T-line and the signal / trajectory is important. You saw they came back up through, but then they were hovering right here on the T-line. And what type of day did we do on Friday? A big, long-legged doji. So what's the simple rule of a doji? They're going to move it in the direction of how they open it after a doji. When they started opening or trading this lower, especially coming down through the T-line and the 50, what did that tell you about your trajectory or your price move? They weren't going up anymore. They were backing off. Close it out. What's the worst case scenario? Again, they bring it down here and then come back up above the T-line you get ready to buy in positive trading. That's kind of what was the indication on MT or MITK today. That when they brought this back up, now we know what we should be doing based upon tomorrow's open. If it opens positive, we're still all right. If it opens lower, where do you think they're bringing it back to? Probably back to the T-line. And if they bring it back, open lower and bring it back to the T-line, what type of signal did we just set up? There's your bearish doji sandwich, telling you more than likely there's going to be some more downside. Again, these are all anticipating what signal is setting up, and that's why I think it was even SP today. Say, how do we find the, I'm not trying to embarrass you, SP, I'm just pointing out that the bricks and mortar of candlestick analysis is the 12 major signals. And then, as you've seen, we've done some trainings here recently on the patterns and the high profit patterns, like the doji sandwich, like the best friend. There was about 15 of them. So you want to learn the bread and butter signals, the dojis, the hammers, the inverted hammer, the bullish harami, the bullish engulfing, the kicker signal. Because when you see them developing, you've got a lot faster reaction time for anticipating what might be happening, especially when you're seeing them in an extreme part of a trend. Once you get up in the overbought area, you want to be a little bit more cautious of potential sell signals setting up. Let's see, I'm going to run through the biggies here again real quick. Nugget, acting well, which has made the gold stocks acting well. Labu was trying to hold on today. But look what how the selling was created. There's your gap up doji, big sell-off. Then look where you are. You haven't been able to close back up above the T-line. However, today, Labu was trading positive, a bullish engulfing signal after a doji. The stochastics are still heading down, but the bullish engulfing signal was occurring where? Right at the same level you started seeing some buying before. So that could have been a support level. But also knowing that if they came back down, what the heck is that thing? Came back down through the open, what was that telling us about the strength of the bulls? It wasn't there. So notice how they come up and they use the T-line as a resistance level. If you see that happening and selling off, what can you kind of anticipate? Well, the bulls aren't there. If they break this level on a lower open tomorrow, where's your next likely target? Possibly down here. So if you can analyze that on Labu, the biotechs, that pretty much tells you could be short Labu and or any of the biotechs that have strong sell signals. You can be selling them. So where Nugget is telling you could be long gold stocks, Labu is telling you could be short biotechs, or you could be buying LabD, the opposite, the bearish fund. Apple. Traded up a little bit today, traded lower at the end of the day. What can you assume from this chart? You might have a wave 1, wave 2, going into wave 3. Labu is an upside down. That's called a dumpling top, Brian. Fry pan bottom looks like this. A dumpling top looks like this. Netflix also was trading up during the day. But again, observe the obvious. Which direction has this been moving? Here's a case where you can see the 34 has been a relevant resistance level. So if you can draw a line down through the tops, and you can pretty much draw a parallel line down through the bottoms, that becomes your next likely target. And if that's your next likely target, especially on some of these biggies, I call them the biggies, I guess, what are they, the FANG stocks, that's pretty much telling you also that if they're selling off the ones that are kind of in the forefront all the time, it means the market is probably not showing any great strength, kind of a confirming the confirmation. Another sell. Notice how the 50, Amazon, where do you think this one could possibly go to? I'd watch the bottom of the trend channel. And Tesla. Tesla was holding up reasonably well over the last few days. But the fact that they sold it off, now it didn't do a sell signal, but it still told us that if they were able to start trading this below the T-line, if you were long, you probably wanted to take some profits. Again, what was the worst case scenario? They took it down and brought it back up. You could always buy back in. Okay, let me take a look at a few more that have interest. Here's GOL. Somebody asked, should I be taking profits today? I think we had to put a stop right here at today's low. It didn't look like it got quite to today's low, just barely missed it. Now, what do we got that we can see? Wave 1, wave 2. Where did wave 3 start? With a bounce off the 50 and a doji sandwich and a gap up through the resistance level. You want to watch this. Now, if they open this lower, you can take profits, but you just watch to see how effective or relevant the 3T line and the T line may be. It should still be in an uptrend. MDRX. Again, here's the little clue that this may be a strong chart. Look where they back this off to today. Right smack dab to the T line and took it back up. If they open this positive, what do we got going? Pretty much breaking out through this level. And they're going to move in the direction how they open after a doji. And the fact that they used the T line as support today was a little bit of added evidence that the bulls were in control. So where do you think the next target would be? Probably back up to the 50, and if it got up to the 50, which let's say it was right here, just above this level, now you're in the gap area, which means they could be taking it up to fill this gap. New Age was acting well today. You can see the fry pan bottom. If you're long on this one, you've only got one criteria. You stay long until you see a sell signal and a close back below the T line. And PLYA, there's your kind of your Morningstar signal. Didn't quite confirm, but you got a Morningstar signal. Let's say the market does open up stronger tomorrow and this starts trading above the T line. It becomes at least a move back up to the 34, and then see if it gets up to the 50. But at least you can see there was a reversal today. ZFGN. Was this Sylvain? Did you ask about this one today? Yeah, notice at one time it was up here, showing there might be a good strong breakout, but then closed right back here. So this only gives you one avenue. It needs to open positive and trade positive if you're long. If it opens lower and starts trading lower, what direction is it moving? Just sideways. Move your money someplace else where the probabilities are in your favor. And that same scenario occurred in Krone today. Early in the day, Krone was trading up here. And if I had bought this today, thinking, all right, they're doing a Morningstar signal after kind of an inverted hammer doji. And it closed back down here. What's my analysis at the end of the day? They're back below the T-line, and there's no evidence the bulls have taken control, get back out of the position. And that was the same scenario. That was a little bit more evident that if this was a breakout on LSCC, when they came back into this range, what's that telling you? The bulls weren't there just yet. Close it out. Because at this point, you don't know whether they're going to back it off and test the T-line and the 50 or do another doji day for 3 or 4 more days. It didn't tell you anything. So anytime I've got a chart that's not telling me anything, why do I have my money there? I want to go find the charts that are telling me something. I'm looking for the charts that have a very simple entry strategy. Bearish left-right combo, gap down through the 50, and a doji. So what was my criteria today? If this opened lower, what do I got going on? A bearish doji sandwich. And what gave the evidence that this might be opening lower? Obviously, the market was opening lower and trading lower. We had looked at this one Saturday, when we did our options training session. That is a strong sell. Now, this goes back to that instead of trying to learn 15 or 16 strong chart patterns, just learn 3, 4, 5 very well. And the reason I recommend that is I know all the patterns very well. So I look at all these charts and think, oh man, I've got the kicker signal, I've got a bearish best friend, I've got this pattern, that pattern, which one should I take? Instead of narrowing it down to say, all right, I know what should happen after a bearish best friend. If they trade it lower, where would you buy? I bought puts on the open today. Doji gap down. Yeah, worst enemy. Okay, there you go, Lee. Yeah, so this is why, knowing that this is a very strong sell signal, if they open this lower the next day, the bears are still there. Now, is it going to go down here or here or here or here or here? You don't know. You just know you're in the right direction. Now, I'm going to skip. Somebody in the option room said, why did you just buy the puts on this and not a put spread? There are times when a put spread, most of the times a put spread is, your best friend running away. A put spread isn't as effective on a big price move. For example, you could see that Wayfair was not getting up through the 50. And then notice when it opened lower today, what kind of signal we had, kind of a bearish doji sandwich slash little bearish trend kicker. So I bought puts, a put spread, the 98 and a halves and the 96. So there's $1, 98 and a half. It's $2.50. I thought I had the math right early. $2.50. So if that had started moving down to where it was going to trade below 96, I bought it 2 weeks out, December 28th. Thinking, all right, if they sold this off, I bought them for $1.10 on that spread. You would think that if they went way down below 96, there is 96, which I didn't expect it to do today. Oh, that's close enough. that if it got down here eventually, that $1.10 should go to $2.50. The difference between the 98.50 and the 96. When it went even lower, you'd think, all right, that should come out to very good profit, because now they should, just because they're moving away from those at price, that spread should start working. Well, unfortunately, what happens is if you're buying puts, I say you, people in general are buying puts and the stock is trading at 100, what puts do you think they're buying? Well, they're not buying the 105 because that's way in the money. They're probably buying the hundreds or maybe even the 99 puts. That's where they're putting their money because they want the leverage. If it's down to 97, what do you think the most active puts become? The 97s. If it's down to 96, where do you think the most active trading is? 6. So what happens is, as this goes down, the 98.50s become less traded because they're now moving to where they're in the money. And the 96s, if it's trading right there, it's starting to become more active, and they start building up a faster premium. So the difference between your 98.50s and your 96s doesn't get that wide because the 96s are starting to build up some more premium in them. So this, as long as this stays below 96, the closer we get to expiration, which will be 2 weeks away, that's when it will start spreading out to the $2.50 level. Right now, it's only at like I paid for $1.10. The stock went down, how many points? Almost 10 points today. And the $1.10 went to, I think, $1.50. So it was up 40 cents, which is a decent rate of return. But I want to see it go to 210. So anyways, the other side of this analysis is you see things rolling over. You see what could be potentially a doji sandwich if it opens lower. That's why you want to be able to anticipate what type of signal or pattern is coming up. So that one was a good short. Crisp traded higher. When did it become a good short? When it came back down through today's open. That told you the bears were still in control. Light was another one recommended for a short. Didn't do a whole lot of activity, but it's still a left-right combo. I would still be shorting this one on weakness tomorrow with the anticipation they could be bringing it all the way back down to this level. Again, Wayfair had kind of a little bearish trend kicker. Zoo had kind of a little bearish trend kicker. Telling you probably the next target is at least down here to the bottom of this range. Ross Stores. Another one that's setting up for what, if it breaks this level, what do you got going on? Kind of a bearish J-hook pattern. STX was another one that we looked at over the weekend in the options training. But if it traded lower, got it right in this range, that this one could have the trajectory of what the existing trend was before the little pop-up. Overstock. This is the type you really want to keep your eye on. Notice a slow curve. The slow curve usually is a good slammer to the downside. Are these all, Steve, some of them have already moved pretty far. Now, Overstock, I just put a star next to because that could conceivably come back down here to this range, which would still be about a 35% profitability. Now, the TLRY Notice when they sold this or got this one below the T-line, there hasn't been any buying since then. Now, would I short this here? No, not with it down here in the oversold area. If I was short, I would stay short. PS, bearish doji sandwich. Failure here at the 50. Where do you think a logical target would be? Right in the existing trend. CDNA, kind of a dumpling top, and then the breakdown. Where do you think the next target is here? Possibly all the way back down to the 200-day moving average. So we were long, or we were thinking of going long on QLYS, but it never confirmed. Now here's another case where if it was trading up here and you were aggressive, thinking, all right, it's done a bobble breakout. When it closed back down here, what did it tell you about your bobble breakout? It didn't occur. That's why you want to close it right back out. Now, look what happened. That instead of a bobble breakout, what can we say about the 200-day moving average? It pretty much formed sell signals or a double top, making, again, down here your possible support level. And SFIX, when they pop down like this, everybody says, well, should we be buying down here? Well, the risk reward is when you have a breakdown like this, even though there's a pop in it, you've done damage to the investor sentiment. So if I had bought on this day, anticipating a pop back up to the T-line and saw a bearish Harami that told me the selling or the buying had stopped, now look what you have. A bearish doji sandwich. You're right here at the lows of recent. And you've got the possibility of a wave 1, wave 2, wave 3 bearish J-hook pattern. So all this information that we can put into our visual analysis, below the T-line, stochastics heading down, sell signals at relevant resistance levels, just gives you that much added benefit or added probabilities that you're going to be in the right place at the right time. All right. Guess that's about all I got tonight. Are there any questions? Oh, and I've kept us way over time. All right. Jim, if you want to do the double line, everybody just put limit it to. Yeah, we're going to just do a few tonight. Whoops. EXEL, very simple. It's going to move in the direction of how they open this one tomorrow. Chipotle. Notice the doji gap down. More than likely, there's your first target. AVEO. Nothing. You probably can't be short this one because it's below $5. You should be out of this one. NTWK. If you're short, you stay short. Now here's a case where if I'd been short, look at your big bearish engulfing signal. Notice kind of your belt hold. I would have probably covered the short. You could have gone back short, but I'd be more apt to have gone back short when it came back up to the T-line and failed. So now you have a wave 1, wave 2. I don't know where wave 3 will possibly take you. Costco, the left-right combo right there at the 50. Remember, the left-right combo is compelling enough that if you see a bearish left-right combo, even though it might not have closed below the T-line, you close it out because the probabilities are pretty strong that a left-right combo is going to create enough selling pressure that you want to be out of it. The probabilities are that you want to be out of it right away. There's a bearish doji sandwich on Xerox, wave 1, wave 2, big move to the downside. You're in the oversold area. Now you start watching to see if there's any buying occurring down here. Denny's, nothing. No direction. I wouldn't be long or short on this one. Six Flags. I wouldn't buy a put on this one until you see them really sell this one off. Unless you were thinking about SFIX. That one I'd be more apt to buy a put on if it opens lower. Wave 1, wave 2, wave 3 bringing you down here. Bye. WBA, Walgreens, stay short. Anytime you see that gap down, it's telling you there's a strong force to the downside. Lulu, at this point, I probably wouldn't be long or short. You can see the stochastics are going sideways. I'd be someplace else with my money right now. That one's just not giving you any indication. Here's another one that if it opened lower tomorrow, you can pretty much see what would happen to the support area. You'd be breaching it with kind of an ugly dumpling top. So you can get ready to short this one, especially with your doji failure and then a close below the T-line. ACD, J, is that what you're looking for? Or were you looking for ACB? This one, I wouldn't be long or short right now either. Goldman, usually the big financials will tell you which way the market's going. If you're short, you stay short. Now, what's your little warning here? Today they gapped it down in an oversold area. You start watching for a reversal. Netflix, if you think about going short, you can see there's almost a little support level here with an evening star signal. You can short this one on weakness. This will also be a function of what the market looks like it's going to do on the open tomorrow. Salesforce, another one that you can short. Doji, gap down, gap down. There's a gap to fill right here. That's probably at least your first target. I think we did Amazon. Amazon, if you're short, you stay short. Left-right combo, failure at the 50. I would look for it to at least come down into this area. Chicken soup for the soul. Well, you can see your long-legged dojis. Trees are bottom. If you're long, you stay long. Almost looks like you got a little type of a scoop pattern. I would stay long as it stays above the T-line. CGC, nothing. If you're short, stay short. GM, nothing there either. You're sitting on a support level. You don't have any direction to this one. If this breaks down tomorrow, you can be going short if it doesn't support here at the 50. Glue, I'd probably be someplace else. GBT held up for a while today, but when it closed back below the T line, you should have closed it out. It's lost its energy. I stopped watching the clock with you, and I just relax. And okay, all right. Americans stay short. Rocks. There's your bearish engulfing, your gap down. If you're short, you stay short, but you can see that the downside trajectory isn't all that aggressive. KGC, that's still a good-looking chart. As long as you stay above the T-line, one of the gold stocks that are holding up well. How often do you short versus buy puts? Bruce, it all depends. It depends on the account that I'm trading. If I'm trading my options account, obviously I'm buying the puts. If I'm shorting Amazon, probably I'm not going to short stock that's trading at $1,500 a share, so I'm probably buying the puts. But if I'm going to short if I'm going to short a stock that's trading at 15, I'm probably trading the stock or shorting the stock. But again, that's up to each individual. If you're an option trader, obviously you're going to trade the options. If you don't like options, you're going to trade the stock. Cassie, you like it, just stay long. It's not anything exciting. On a 10-minute chart, do you take into account the prior day, end of day signals and patterns for decision making in the 10-minute chart? No. Remember, Marshall, the candlestick signals are the graphic depiction of human nature. So at the end of today's trading may not have anything to do with what investor sentiment is tomorrow morning. So as soon as your day ends, your intraday charts now become obsolete. Now you want to be more analyzing what the daily chart is telling you. Big bearish left-right combo closed right at the 34. A week open tomorrow would probably make the 50-day moving average your likely target. Twitter, you should be out of this one. You had the potential of a fry pan bottom breakout, but when it came back through the candle that kind of broke out, that's where I would have had my stop. I was moving in the wrong direction. Big left-right combo on IMMR after a little inverted hammer. You can be buying this one. Just be aware of what happens once it gets to the 50. XPO. Bullish Harami. Where do you think your first likely target is going to be? Probably a bounce back up here. If you were short, especially in the oversold area, I've always made it a policy that if it opens positive the next day, especially where do most people sell? They panic sell at the bottom. This is why we've got the graphics, the candlesticks to tell us when the buying has started. If I'd been short, I would have covered it on this day. I probably would have covered it right here as it opened positive. Because the probabilities with stochastics in the oversold area that if they're buying, that's the area they've stepped back in. ACB, yeah, I wouldn't be long or short. Oh, the Dow weekly chart really doesn't make any difference depending on the length of time that you're trading. Let's see, is this the weekly? You're getting toward the oversold area, but looks like you still have a little bit of downside, I would think. Right down. Yeah, watch to see what happens once it gets down to that level. Johnson & Johnson, let's go back to the daily. Big sell-off. There's your bearish kicker signal, still selling it off. We did XTX, stay short on this one. Okay, let's call it a night. Let's see. You're probably gonna. I'm gonna probably be doing some puts on Overstock if it opens lower tomorrow, and maybe SFIX also if there's your berry stogie sandwich. That could be taking you down into this area. All right, everybody. Have a good evening. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.